Good morning, traders. My name is Brad Matheny. Today is February 4th, Sunday, bright and early in the morning in California. Waiting for that river of moisture to blow on through. So far, it's been very mild. And of course, you know, be aware, California is very, very large. If you're not from this area, give you an example. The northern LA County and Ventura counties have all been getting slammed. Everything pretty much north of Oxnard, or Oxnard and going north. Oxnard is a beach community north of Thousand Oaks and Woodland Hills area. That's been getting slammed the last couple of days. If you watched the golf yesterday up at Pebble Beach, you'll know that, you know, Carmel was getting some rain as well. That area is going to continue to get wet. Way down south where I'm at, 50, 60 miles from the Mexican border, we're getting mild drizzle, rain, occasional bursts of downpours, but nothing serious yet. So we'll see what happens over the next 4 or 5 days. Either way, California needs it. So if it builds a snowpack and gets all set up, we're all good. In fact, let's take a look at, just for the heck of it, winter storm warning, Mammoth Mountain. Partly cloudy, base depth 65 inches of snow. Main lodge total 136 inches. So that's pretty good. I mean, you're talking about 10 feet of snow. If this storm comes in and really pelts it, we could be looking at another 25 feet potentially, well, a total of 25 plus feet on the ground in Mammoth again. We saw that about 4 years ago. If you have never seen 25 plus feet of snow on the ground, do a Google search for Mammoth snow, and you'll see some big, massive clearings in roadway. It's incredible. 3-4 stories of snow on the ground. It's really incredible. Okay, this is the gold and metals report. Sorry to divest into weird weather in California. Gold is setting up a beautiful, let me try to get this at the top of the chart. Too many lines. All right, let's just come back over here. There we go. Is moving into a beautiful flagging formation rally phase. So what I do believe is going to happen here, we've moved into a consolidation in the dollar. Let's come over here and take a look at the dollar. So the dollar has set up a base. It's moving into a flagging formation. Again, speculative phase peak pattern here. I want you to be aware that these things are all over the place. I need you to start seeing these so you understand what's coming. We've got a base here. We've got a rally to a high. We've come back down, pulled back. Now we get our flagging formation. So here's our flagging formation. This flagging formation could continue to rally up. You see we have this Fibonacci price amplitude arc about 4 or 5 weeks out. More than likely the dollar is going to run into some resistance out here in late February, March, and start to potentially move down, retesting some of these support levels. That will be a big move for gold. This flagging formation, if it holds and moves into the phase C, the pullback, the breakdown of the flagging, looking for intermediate support, I suggest that intermediate support would be found somewhere in this area and or potentially down near this area where previous support and resistance area had been reached. So if this breakdown of the dollar happens near the end of this month, we could see gold moving quite a bit higher near the end of February, early March. Now let's go back and take a look at gold. So that would put us at about this same time frame right here, end of February, early March. That would put us in kind of a waffling trend here, attempting to move back up to these highs, and then maybe a breakout move up into the breakaway sector. Now this move, if my analysis is correct, It's going to potentially be, let's call it a 6 to 12% upside move between now and maybe April 15th in gold. You can see my weekly analysis of what's going on with the RSI and the stochastics. We've had this beautiful flagging formation, had a flagging formation back over here that broke out. We could move into a sideways flagging formation again over here, extending a broader flag. But it looks like we're going to get a pretty good move to the upside with gold. So be aware. It's probably going to be about 5, 6, 7 weeks. But then I think within that 5 to, let's call it 8.5 weeks, we'll be up into this 2250 area fairly cleanly. So here we go with the custom indexes. Gold cycle index is moderate accumulation, very quiet, kind of stealth accumulation right now. The fear index is at 5.79, moving slightly higher. I've highlighted in the top-down video the speculative phase peak pattern. In the general markets right now, the SPY and NASDAQ and Dow, we are in a rally to a new high phase. So understand that we've got multiple confirmation that the threat of a downside price move is still there, but is diminished considerably. We are in a rally phase, which I believe could last into mid-March, early April, trying to find a top somewhere between 513 and 530 on the SPY. Those are the next Fibonacci levels. You are fairly clear to be attacking this to the upside. I believe we've got maybe about a 5 to 6 maybe percent move to the upside before it'll stall, maybe a little bit more. So be aware that everything is confirmed just in the last week or two, that we are getting this rally to a new all-time high. We had waited essentially for this broader flagging formation to confirm, which we got last week, looking very solid to the upside, but there is a catch. And the catch is that when this new high hits, we're going to set up a new speculative phase peak pattern, and ultimately, because of the inverse pattern that is setting up, this should be an ultimate high setting up. This ultimate high will be the end of this wave up. This is wave 1 to the upside. We will have wave 2 to the downside, and then we will set wave 3 back to the upside. So be aware that what we're looking for right now is the ultimate high, the end of wave 5 of wave 1. This will set up an extended decline, which I've been highlighting for many months, probably into August, September, October of this year. So be aware, that's exactly where we're at. We're at new highs. We're rallying to an ultimate high, which will then move us into wave 2 to the downside. Gold custom trend index building very strong support near new all-time highs. I think we're going to see a bit of consolidation, maybe a slight kind of momentum build. Nothing very aggressive unless unless the U.S. dollar collapses. And I don't see that happening for another 3 to 5 weeks. So expect this to just continue to melt upward, eventually trying to break above 21.50 in gold. And then, like I said, once the dollar starts to come down, and assuming it's not the ultimate peak setup, understand that gold will collapse a bit when that ultimate peak sets up in the SPY and the NASDAQ. So when the markets turn and they turn south and there is some sort of moderate collapse, gold will pull back as well. That's very, very common. It then normally rallies 3 to 6 weeks later, setting up a new all-time high or a new recent high, and then attempting to rally as fear extends. And that's what's going to happen at the end of the wave 1, the ultimate high back over here. Remember, where was I? Back here. So as we set up this ultimate high and pull back, gold will likely pull back, silver will likely pull back. We may be above 21.50 in gold by that time. But as this moves into wave 2, correcting to the downside, I believe that gold will move strongly to the upside as fear starts to set up as how deep it will go. Now understand that if my analysis is correct, and this was a wave 4, this is the beginning of a wave 5, we are going to hold on the SPY around this 397 to 414 area on the wave 2 pullback. If I'm incorrect, and it sets up a broader, deeper pullback, then we're going to clear these lows and come back down, finding some deeper support. That would make this an ABC, which, by the way, is illogical because we've reached new all-time highs here, so that can't happen. We're in a wave 4 move here, a confirmed begin a wave 5 here, searching for an ultimate high, waiting for a wave 2 pullback. Okay. Metals standard deviation trend consolidating. This is very solid in my opinion. Building a move while the US dollar is strong. I believe that the melt up, like you're seeing back over here, where was it? Right here, is the best indication of what's actually happening, this gold trend index. So even though you're seeing the standard deviation index fall, this is an indication of lack of real demand for gold, whereas the actual price is hovering up near highs and really starting to attempt to make a move above 2150. Metals valuation index looks a lot like the standard deviation index. You can see the Fibonacci price amplitude arc. That's going to be the next big breakout move above these two arc levels. Metals valuation monthly, flagging, getting a brief little washout low here. Could be something very solid setting up over the next 2 or 3 months to the upside. At least that's what my analysis says as our momentum and trending continues to move higher. Remember, now that the markets have cleared to try to reach a new all-time high, or what's called an ultimate high in this case, to end wave 1, the pressure will be off of gold. The only pressure you're going to see is technology and dollar continuing to put pressure on metals. But the accumulation phase is still there, and traders are still looking at this as a very wonky presidential election year. So understand it, gold is going higher because traders are still fearful. Okay, here's the FANGs index. This is what's driving the market. Again, this is a big, broad move. I'm calling it the dot-com do-over. You're going to hear me say that over and over again. A lot of money has moved into the Magnificent Seven or the FANGs index. This is what's driving the rally in the markets. You're not seeing a broad market rally where, you know, most of the sectors are rallying. What you're seeing is technology, big technology rally. This is a dot-com do-over. And again, you know, it's very difficult to see, but we've had a little flagging, rallied up, took out the high. It's rallying up to a new peak. It will set up a new speculative phase peak pattern. We're getting very solid momentum on Q4 earnings. At this point, ladies and gentlemen, this could carry into, you know, Q1 2024, maybe even a bit further. But again, these are getting very elevated on price to earnings ratio, extremely elevated, and I think we're going to see a dramatic end to this when it reaches its ultimate peak. Okay, gold setting up next week with the Harami Inside Day, temporary bottom. Harami Inside is normally a flat day. Temporary bottom, finding support. Temporary resistance, finding top resistance, finding resistance. Breakdown bar could be a moderate rotation to the downside. Then we get a blank day. Then we get rally, 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 and a blank day on the 12th, 13th, 14th. Gold may be setting up some moderate rotation near these highs. Again, take a look over here. So we could see a bit of rotation, then rally, rally, rally into the week of Valentine's. Could see a good solid move to the upside, and that would be a very solid upward trend if everything holds up. This could also mean that the SPY could run into some difficulty this week, as well as the US dollar. Okay, custom metals index holding up again, building a flag. You can see it here. It's kind of reaching an apex. We'll see what happens next week. I do expect gold to continue to melt upward. So if you were to come to me and say, Brad, what do you think is going to happen? I would tell you that this is gold. We had this gapping move higher. I think we're going to move up above 2120, maybe 2130 up into this area, nearing these highs before we get into that big rally phase up into the 2250 area. And we move to volatility index, still is bullish. Remember, the markets have now confirmed the speculative phase peak pattern. We are in a rally to an ultimate high. So we are now fairly confident that the markets are going to attempt to move to the 530, or SPY will attempt to move to 513 to 530 area, reaching an ultimate high, maybe a little bit higher. We'll see how this plays out. I do believe that the April, May, June area is very toppy based on cycles. I expected the markets to roll over and stay below the all-time highs back in December and January. That's not the case. We now have confirmation to the upside. I waited 1 week to tell you that we have confirmation of the upside just in case it rolled back down. I was going to explain it to you. So we come back over here. SSO, I was just drawing on this. So you can see here we've rallied, we've gotten up, but in the SPY, what we have here is, here's our ultimate high. We got above it briefly here. This was the previous ultimate high, way back over here. And where we're at right now, ladies and gentlemen, is we have gotten above it. Try to spread this out. Gotten above it last week, right here. We got above it back over here. And so there was our confirmation trigger right there. We got above it, and that's a new rally phase, but we needed confirmation. This last week provided confirmation on a dual trigger, actually a triple trigger of the speculative phase peak. 2 bullish speculative phase peak patterns and 1 inverted bearish speculative phase peak pattern have now confirmed that we're in an uptrend and we are rallying to an ultimate high. So that gives us fairly clear indication that we can move into a more bullish phase in the U.S. stock market as long as we don't get a disruption in underlying. For example, the dollar doesn't collapse, or we get some very weird news causing the market to collapse. That's going to be, again, my target is this 513.05 to 528.09. That's going to be our upside targets. This yellow line right over here, that's going to be our ultimate upside target. I believe that's where we're going to run into resistance. That's only about 6% away. Okay. So again, there's your update. Gold should make a very good move. Let's take a look at silver real quick. Silver futures flagging. Gold will make a big move. I believe silver will be back above, say, 25.20, maybe to 26.35 over the next probably 4 weeks. And then depending on how this market moves and what actually happens with the dollar, remember the US dollar has only about 3 to 5 weeks before we reach this apexing Fibonacci price amplitude arc, and I believe that's going to cause a big shift in the dollar market. So with regards to silver and gold, we have about 3 to 5 weeks. I don't want that. Go away. We have about 3 to 5 weeks, which puts us 1, 2, 3, 4, 5. Okay, perfect. That puts us right in about this area for a move up above 24, possibly up above 25. And that could be a very explosive move for gold and silver. Okay, guys, that's it for now. Talk to you later.